Hey everybody, I hope you're doing great. Ninja Nation, let's talk about the car market. I'm getting so pumped, I'm getting so ready to buy a new car. I mean, not now. Like, I'm not gonna start buying cars till the fourth quarter of this year, but watching this absolute implosion in the auto industry is, I gotta be honest with you, quite amazing. And remember, there's time lag. It takes a long time for people to stop paying on their cars, the tow truck to show up, and they're like, what do you mean you're gonna take my car? Or they just hand back the keys and they can say, I'm done with this lease. I can't afford to buy this car right now at those interest rates. Then it takes time for the car companies to take those to the auctions, get them to the other dealers, and the dealers go, what do you mean I can't sell these cars anymore for this price? It takes time to work its way through. Guys, check this story out. On the heels of the pandemic, borrowers with low credit are falling behind on car loans. Well, no duh. I mean, if you got a low credit score, it's probably for a good reason. You probably weren't the best at paying loans off, or you got into some you probably shouldn't have. But there's hope. There's hope for all of us. I've had a low credit score too. I know what it took to dig my way out of that hole, and I guarantee you I never ever looked back. But it says right here they're falling behind on car loans, and that means that banks are going to price in that risk, and they're going to add more fees, higher rates to anyone that has lower credit scores. You're like, well, thanks. So now I get screwed because some other guy's not paying his thing? Yeah, that's literally how it works. It says right here, borrowers with low credit scores are falling behind on their car payments as inflation eats away at consumer spending power. A report from Cox Automotive found that 1.89% of auto loans in January were severely delinquent and at least 60 days behind. Those typically offered to people with lower credit scores that come with high interest rates were at least 60 days late at the end of 2022. It was the highest December level since the credit rating agencies started tracking in the year 2000. That means it's even worse now than when we were in the Great Recession, everybody's losing their house. Now people are gonna be losing their cars. This is absolutely amazingly massive. On top of that, you got student loan debt. It's gonna be an issue. Holy cow. All right, it says, I think we are starting to see the stress of the consumer, said S&P credit analyst Amy Martin. Well, no duh, Amy. Good thing you went to school. Captain Obvious Award right there. Not only are subprime loan delinquencies higher than pre-pandemic levels, they're higher than December of 2008. What did you study? Aquatic basket weaving. What? Put down in the comment section what you think Amy might have studied in college. I'm just curious what your thoughts are. Why are loan delinquencies rising? Well, while the job market remains strong, seriously, also throw in your thoughts on that too, because I don't think the job market's strong. I think jobs have gone from 40 hours a week to like 28 hours a week because of government interference. And now people are underemployed. They've got to go get multiple jobs. I think it's absolutely horrible. Oh, it's like, hey, I work for the fast food industry and I want like $25 million an hour. Cool. Let's hire that robot instead. What do you mean? Whew. All right. It says, meanwhile, interest rates on auto loans have gone up. Thank you, Federal Reserve. They got hit with a double whammy, Martin said. The subprime, man, whammy. I feel like I'm in that movie. What? Whammy. Man, Amy, I want your job. The subprime consumer is being impacted to a great extent by inflationary pressures, and their vehicle loans are not as affordable as they have been in the past. But the subprime loans that borrowers are falling behind currently remain a small portion of overall auto loans. Cox Automotive found buyers with subprime credit scores accounted for just 5.2% of sales in December, compared with 13.9% in 2017. Well, that makes a lot of sense because the people on the lower end of the spectrum have less money. And I don't know if you guys have been paying attention, but cars have been not exactly going down. Now they're starting to, but again, we have to hit that time lag. Point being is, Amy, I want your job. I want to work for S&P. Oh wait, that's the company I was wrong about all the mortgage stuff too in 2008. Awkward. It's almost like there's a trend here. Yeah, Ninja Nation sees things ahead of time. We're prepared. We're not going to be worried about this. We're not going to be riled at all. As a matter of fact, we're licking our chops because I'm going to be buying a ton of cars. I'm going to do it on the YouTube channel. I just can't wait. Bought this car, bought that car, bought this car. We're going to have all kinds of cars. I'm going to run around like roller skates. Point being is that we're going to take advantage of this. I want to warn as many people as possible, but honestly, I don't know if we can. Guys, let me know your thoughts on the automotive industry. What do you think of Amy's job? What did she do in college? With that being said, the Economic Ninja is out.